Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is December the 14th, 2018. Strong hand, long-term thinking, unconfiscatable. Bitcoin is the apex predator. And today, on this very special show, we have the apex predator of guests. It's Simon Dixon. He hasn't been on the show since around, I think it was November 10th, November 9th. We were talking about the year anniversary of the Bcash pump. And even though it's been only a month or a little over a month, so much has happened. So last night, everyone knows I got to Tel Aviv and my sleep is way off, and now we're on a new time pattern. So I decided to start off this new country tour, outside of America tour of my show, part of this journey with the great Simon Dixon. Where are you right now, Simon?
I'm in in Isle of Man, in my new house.
Oh my God, we didn't even talk about this. You got a new house. Did you end up paying in Bitcoin, or how did that end up working out?
Yeah, we paid in Bitcoin after 9 months of source of funds, source of wealth, KYC, everything you can imagine. So if anyone wants to buy a house in Isle of Man, we've educated much of the lawyers here on how to do it. There are some crypto-friendly banks that are willing to accept if you need to convert them in fiat for the house purchaser. And there's a bunch of house builders here that understand how to do a transaction. So I think we were a 9-month test bed for the island on how to do something like this. But now there's a formula for those that are looking to purchase their house, at least on this island anyway, if you're going to be one of the 85,000 people that join us.
Well, the funny thing is, Isle of Man has made itself out to be a very crypto-friendly place to be. I mean, and that's part of the reason you're there. So they had to get this straight. So you were the test case then.
Yeah, I mean, Isle of Man were the first jurisdiction to actually publicly support the crypto sector, but they had a lot of resistance from the private banking sector here. And the private banking sector accounts for a lot of their jobs. There's mainly 2 employers on the island, which is the gambling industry and the banking industry. And then there's lots of small businesses and farmers and all sorts of stuff. But the banking system wanted to support it, and some of the niche banks, obviously the big banks like Barclays, were doing everything they could to stop the government's goals. But the smaller banks wanted to support the industry, and then the government, not officially, but from what I know, got a call from the Bank of England, and the Bank of England threatened the banks to take away their clearing if they try and support. Even when the banking sector wants to support the industry, actually the real enemies are the central banks, and that's exactly what Bitcoin set out to disrupt.
Well, so many people out there are saying this is a crypto winter. And to me, it's a time of opportunity. And look at this, you're buying a house in crypto during this supposed crypto winter. Again, this is real life here, people. You might hear stories written about sad things. This is such a positive. So let's jump into a subject matter that actually I haven't covered here yet, that you were telling me about, this valuation war among exchanges. Elaborate on this.
Yeah, so it's really interesting. For those of you that have been following our work, I co-founded banktothefuture.com, and we've been working for an awful long time. Obviously, securities and blockchain is now a subject, but we've been working on securities and Bitcoin and blockchain since 2010. We did many of the funding rounds for some of the large unicorn companies. And we've just launched our secondary market into beta. And with the secondary market comes real-time pricing of some of the most valuable companies in the crypto space. In the beta, we've only done one stock, which is Bitfinex SPV equity. And there's now real-time pricing. Now, while it's limited at the moment to a small group of investors on our platform, we're starting to see a bit of a valuation war. I read an article where people have been quoting the Bitfinex banktothefuture.com price to and giving the exchange a market cap of about, was about 2 billion, I think. And then what's really interesting, one of our other portfolio companies, we invested in the Series A round, Kraken, has come along and announced a valuation of 4 billion for their upcoming, what they're calling war chest round. And prior to that, we had Coinbase, who launched closed their funding round at about an $8 billion valuation. Now, what's really interesting is, Bitfinex are not exactly, well, if you could put these into categories, you've got Coinbase, which I would say is taken the approach of complying with every regulation so that you can have an easy onboarding process, so that they can have good relationships with banks, which serves a purpose for new people that are looking to convert their small amount of fiat, pass all the KYC, pass all the usual processes, enter into the US banking system, and onboard into crypto in a small way for the first time. But then once you start to get to larger numbers, you tend to migrate over to an exchange. So Kraken is a US-based exchange. They tend to, well, they've applied for money service operator businesses. And then you have the other extreme, which is, you've got exchanges like all the fake exchanges. Most of them, the ones you see in the top 10 or 20 are all fake volume. You've got, well, companies which I know are not faking their volume are companies like Kraken and Bitfinex, as far as I know. And then you've got all these exchanges which are just, probably 90% fake volume. Then you've got Bitfinex, which is really, I would say they comply with US regulations where they need to, but they consider people's privacy where they can. And that's a really hard balance to get right. And so they tend to be located in jurisdictions outside of the US and don't bow down to the US unless they have to. And therefore, they have a more challenging time with banks because they don't give all the data willy-nilly to the government. They tend to wait for subpoenas till they actually give the data across. And so people are now discussing this premium for being regulated within the US and being more restrictive in terms of who you can serve and who the data goes to, versus the exchange which has the most volume and the most genuine volume as far as I can tell, and yet is trading at a discount valuation to being regulated in the US. So the market is really trying to determine what the value of now of exchanges that take a more crypto-centric philosophy, which I would say Bitfinex is the one that does that the most, versus Coinbase, who take a more bank-friendly approach, which I would say, Coinbase does that the most, versus some in the middle like Kraken and others that are kind of, so the founder of Kraken, Jesse, he comes from a crypto background, I would say, in terms of his philosophy on what crypto does and what it's meant to be. But then you have to run a regulated business, and therefore you have to comply with other things in order to create the business of the value that Kraken actually has. So we're really looking forward in this year to rolling out many of these companies so that we can have what might eventually be kind of like the NASDAQ of crypto companies, where people can speculate and arbitrage between the equity, I guess, of the different valuations. It's not going to be a deeply liquid exchange like a crypto exchange or anything like that, but an OTC market where we can have values to some of these crypto exchanges. And if some of them are involved in, kind of fake volume practices, we can see how the market might value that versus the regulated side of Coinbase versus, the more crypto-friendly side of Bitfinex and everything in between. So we're really looking forward to seeing this new market arise and where people want to go with that.
Well, it's just talking about valuations as large as we've been talking about in the crypto space. It's pretty amazing that we've got these companies that are already worth billions of dollars, at least on paper. So that, again, that's another positive for this for the entire space. I want to remind everyone, remember to subscribe to the channel, pound that like button, Right now, I am TechBalt on Twitter. Of course, this is posted out on Twitter beforehand, TechBalt. We got a lot of different people watching now since we're on at it's 6 a.m. back in America, but in England it is 11. So we got different people watching today. So a little reminder out there. Well, you mentioned Coinbase, and since I have an audience that's primarily Americans, I guess 50% Americans or maybe more, they still have a lot of complaints about Coinbase. And we see Coinbase going in this direction that is away from Bitcoin, to put it nicely, I guess. They've recently added like some Ethereum tokens, I think. And there's some people predicting that this is just not a good long-term strategy, that eventually someone will surpass them in the United States. What do you think about Coinbase and the direction that they're going in?
I think Coinbase, like them or hate them, they're definitely not following the path of the Bitcoin ethos, but they're still going to be, a unicorn. And I think that there's still a lot further to go, because they are following a strategic acquisition path. They acquired the US broker dealer that from Bank to the Future, actually one of the company's Keystone Capital, that's going to be launching their securities token exchange. And they are moving towards being a blockchain, I guess, multi-asset portfolio type wallet type exchange. I think that it makes a lot of business sense to do that, but I don't think it makes sense from the Bitcoin evangelist, in terms of what the ethos of what Bitcoin was originally meant to do. But I also think there's a purpose for that, because you may not want to use Coinbase, but it still is, one of the best ways of onboarding and getting from fiat into crypto, getting started. But I just don't suggest you continue your path that way. I suggest once you get educated, then you learn, I think the topic you're going to cover later with proof of keys, but learn how to own your own assets. And I think Coinbase is following a business model, which essentially is becoming a crypto bank. And that's what they are. They hold your private keys. They provide they're looking to push custodial services, and their model has always been do whatever is required to comply with regulations, so that they can have a friendly relationship with their banks, and so that they can then offer services in the intersection between crypto and the traditional banking world. And that's what they're doing, and I think they're on the path to do that. I think their next game is to be in the securities token market, and therefore supporting ERC20 tokens based upon Ethereum. And look forward now, we've got RSK obviously as well. So we've got Bitcoin sidechains, and then Blockstream has released the Liquid network. And so all of these different implementations are going to compete to capture much of the token market. And whether it is ICOs like you're seeing today, is definitely going to be STOs in the coming years as well. So it is probably their test bed for that.
Oh, what did you just say about RSK? They've got an office where you are, or?
No, RSK are based in Gibraltar, but we recently did part of their institutional private sale on Bank to the Future. But they've launched the mainnet now, and we've actually been playing around with their network, and we've been playing with sending transactions on the Bitcoin blockchain via the RSK sidechain. That's a bit of a mouthful of technical jargon, but essentially what RSK are doing is they're allowing people to create their own tokens and smart contracts. I call smart contracts, but tokens is the main user case of smart contracts at the moment. But what it does is it uses a process called merge mining, where if you're mining Bitcoin already, then you can mine Bitcoin on another parallel version sidechain, and the sidechain can benefit from the most secure blockchain, which is Bitcoin. And then people can tokenize on top of that, and it provides scaling solutions and various other things. So we're really excited about RSK, and obviously because of the Bitcoin and crypto bear market, this is just such I think a great opportunity to be building and accumulating assets ready for the bull market that I'm almost certain is ahead at some point.
Well, I thank you for that RSK update. I didn't plan on it. This is great. Pound that like button, people. I'm learning things. Anything else you have to say about RSK? Because people are always interested in that, and we haven't talked about that for so long.
Yeah, I'm really excited about RSK. We just sent tokens via the RSK network. The wallet ecosystem is evolving, and I think you're going to see. I mean, I'm really happy that it's being done in a bear market, because slowly, it's a lot easier to build in a bear market and test your technology without this mountain of newbies all trying to onboard onto your service, and you're trying to rather than actually building, you have to just spend all your time on customer service and education, which is obviously a good thing. It has a time and a place, but when you're dealing with new technology like RSK, the bear market is the perfect time to test that tech and get it ready for the bull. But yeah, I mean, you can now create tokens and send tokens and do everything that you could do on Ethereum on the RSK network with the most secure blockchain, which is Bitcoin.
And so anyone can do this now. What link do they go to? What site can I send them to? I'll link it below.
I wouldn't say anyone can do this right now, but if it's geeky. It's if you're tech savvy and you're a programmer, then you can do this. But yeah, you can just go to, I mean, the RSK website. I think it's rsk.io. Sorry, Diego, if I've got that wrong. But yeah, just Google RSK Rootstock. You'll come up with something, and they are recruiting developers right now, and the network is live, and I really look forward to seeing this ecosystem build during this bear market.
Okay, they're recruiting developers. They're hiring, I guess. Okay, that's this is good to know. I will link to that after the show. It's not linked to right now, but everything else is linked to, including Simon's Twitter and Bank to the Future. Check that out below. Of course, I want to go back to we were talking about Coinbase and Coinbase becoming a bank, Coinbase Bank. It's going to be. I mean, it is. I mean, because when you get a newbie in a situation, they arrive at Coinbase, and you're right, it's great for onboarding on the crypto. They'll end up with crypto. Well, they'll end up thinking they own crypto because they'll buy a 0x or Ethereum Classic, and then they'll leave it there. And you're right. It's not with the Bitcoin ethos of controlling your own private key. So you're going to end up with all these new people like, I want a cheaper version of Bitcoin. They'll get a cheaper crypto, and they'll just leave it there. And when the next step comes, they won't know how to even send the Bitcoin at that point. Which I mean, this gets me into the subject matter that we were talking about off air too, of Trace Mayer proof of keys. On January 3rd, he wants people to take all of their, by that date, take all of their Bitcoin off of these third parties and learn how to control their private keys. And clearly, with the growth of Coinbase, we can promote proofofkeys.com as much as we want to, but I think it's going in the other direction. The new people are going to become more and more comfortable with these crypto banks, unfortunately. So, what do you think about the proof of keys idea, and who do you see joining this revolution of controlling their own private keys? And do you think that will what's it going to take for people to learn? Another event, and another thing that ties into all this that I wanted to bring up was that some of these exchanges are going to go down eventually, and they're probably practicing what was the type of lending, the fractional reserve. Yeah. So take it from there. I said a mouthful there.
Sure, no. So yeah, I mean, thanks for telling me about Trace's initiative. I'm a follower of Trace. I think he does some great work. He's old school, been around for a long time, and is a testament to the user case of the hodler strategy. And if all you want to do is accumulate Bitcoin, figure out a secure way of storing those Bitcoin, and then if you're in fortunate enough position that Trace or some others might be, where you don't have to spend those Bitcoin, then you can sit on them for years in a secure way, knowing that as long as you've done the security correctly, and hold them, you're not going to be in this position. So, what this ties into is here's what's going to, the people that hold it on Coinbase, what's inevitably going to happen is that if Bitcoin becomes what we all believe, and why I'm still here, because I still believe that it's one of the most scarce things in the world, and because you can own your own money, spend your own money, and have a monetary policy that's based upon savings rather than debt and fixed and sound, that more and more people are going to need Bitcoin, and more people are going to want Bitcoin. Now, they might not want them right now in a bear market because they're just thinking about making some more fiat money. But eventually they're going to come across a user case that makes them want to own it. And one of those user cases might be Coinbase. The reason that is because you might hold a small amount of money on Coinbase. Maybe you've accumulated a couple of $1,000s worth of Bitcoin. Well, in the future, if Bitcoin continues on the path that we believe it will continue once we're done with this bear market, then at some point, those $2,000 worth of Bitcoin might be worth 100,000 or 200,000. I can't give financial advice. I can't guarantee that that's going to happen, but that's my investment thesis, and that's one of the reasons I'm here, because I believe that owning your own money and spending your own money will become a lot more valuable in the future as well. But once it's worth 100,000 or 200,000, you're then going to have a point where you might want to withdraw it, either because you want to put it on your own hardware wallet, or because you want to make a purchase and you want to convert it to fiat, or whatever you decide is right for your current financial situation or position. At that point, they're going to ask you a load of questions. Well, firstly, they're going to do a review, whether you're, whether you're a sanctioned person or a pet person, or all the things we have to do as a regulated company as well. And they're going to ask you to probably update your proof of address and update your identity documents. And then you're going to have to do your source of funds and source of wealth, and you're going to have to prove how you accumulated that money. And now the money is worth a bit. Once it's worth something like 100,000 or 200,000, you've hit a threshold if you try to deposit it at a bank. And then when you go and try and deposit it at a bank, you're going to have all the questions of potentially 4 different banks asking you to prove things about it. So the way the banking system works is you have a central bank, and you have banks that can clear into that central bank. Those are companies like in the UK, like Barclays and Lloyds, or in the US, JP Morgan Chase and Citibank and all those. And what happens is there's loads of smaller banks as well that sit underneath these clearing banks. So you've got a central bank, you've got a counterparty clearing bank, and then you've got hundreds and thousands of small banks. Now, these people in the middle, they have a monopoly on who can clear into the central bank. And all these other banks underneath have to clear through the middle bank. So if you're working with a smaller bank, then you're clearing through a middle bank in the middle. So when you're sending money from Coinbase, they won't have a direct relationship with a clearing bank, because no clearing bank in the world will support this industry. The smaller banks will. So in the case of Coinbase, Silvergate will actually. You'll have to provide them with the data, and then the bank on top of that this bank will have to provide that bank with the data. And then if you're sending it to another smaller bank, then this might be a different clearing bank. So you're going to have to provide the data. This bank is going to have to provide the data to this bank, and then this bank is going to have to provide the data to that bank. And then underneath it, you're going to the smaller bank. So you've got 4 banks that have to be okay with you earning your wealth through crypto, doing all the KYC, all the source of funds, all the proof of wealth. And at that point, you're going to realize, that's why you should have owned your private key in the first place. Now, while it's small money, you might not have any of those challenges, because relative, it's thresholds. But as it becomes worth more, it could, you're in that situation. So the advice is, a long story, is that at some point, even if you onboarded through Coinbase and you onboarded through one of these institutions, the utility of your crypto is going to be massively more valuable to you if you own the private key, if you can spend it as you choose, and you are the master of your own destiny, rather than having to persuade 4 banks you're not a criminal. That's the end.
Yeah, no, exactly. The point is, why deal with all of that when you can just simply have it on your Trezor and you don't have to deal with all that stuff? In the end of the day, you can you'll eventually be able to trade with other people with your Bitcoin directly, instead of having to worry to convert it to fiat through Coinbase and through all that nonsense that you just mentioned. And it is a great reminder to hear that whole bureaucratic nonsense process, And that's why many people got into Bitcoin, to avoid that type of thing. But we've got a lot of people that don't understand. They're just getting into that by keeping whatever they have, Litecoin or who knows what else, Ethereum, on Coinbase. They're going to have to deal with all of that eventually. If they don't move it off, if they don't understand how to control their own private key.
And that's Trace's initiative, which thanks you for telling me about that, because I found out about it for the first time today, is that he's looking to get as many people to go through that process and prove that you own your own private key. So I think that's a great initiative. And I think all of the community and industry should be on board supporting that. And now that I know about it, I'll do what I can to support that as well.
Yes, sign up on this site. You can sign up as like a person who agrees with it, a thumbs up guy. So I did that. I want someone in the Invention sent $5 in the super chat, and he says proof of keys would remove Bitcoins from exchanges, so they wouldn't be able to maintain as many short positions. Could that cause a short squeeze?
In theory, maybe, but I tend to try and stay away from all these short-term speculative little insights. Maybe that will make some money for somebody. Maybe it creates a short squeeze, but if you're a short-term trader, then there's an immense number of things that you've got to start thinking about. But whether that happens or not, I mean, we're not going to get a massive exodus off exchanges. I think I agree with the intention, but at the end of the day, you've got to just look at the world today. The world would much rather have their money managed with Wall Street, even after they've been proven to be completely reckless and criminals with that money. And yet everybody still wants their money in a 401k and a mutual fund, and managed by criminals that are spiking, that are scalping money off of it. And so the same, will happen to crypto. But I guess our appeal is, don't be one of those people, because at some point, your bank might bail you in like Cyprus. At some point, your bank might shut down your ATMs like Greece. At some point, your government might make cash illegal, and at some point, your government will do something that disagrees with another government that will crash the value of that currency. At some point, you will travel abroad and you won't be able to access your money because they think it's fraud. At some point, all of these things is going to happen to everybody, because the user experience of traditional money held at a bank is only going to get worse and worse and worse.
Wow. Well, thank you for that reminder that people are, the bulk of the people out there, they're still very comfortable with having the 401k and doing it the traditional way. So, yeah, that is, we're on the cutting edge here, doing it the new way, where we don't have to deal with these centralized authorities that could just steal at any moment what we think is ours. Again, if you control your private key, you don't have to. It's unconfiscatable at that point. And so you actually, I do want to get back to one point about the exchanges, and I don't anticipate it would be great if this movement got everyone to take their money off these exchanges, or a huge amount of people, but it probably won't, because as you said, people are used to having their money managed by other people, and they're just used to that paradigm. But there's so many exchanges out there, and then there's the top tier ones that seem to be going for these huge valuations. And I've called this the weed out year. I mean, we go through these weed out years between halvings, where the market is down in fiat. And I think one of these weed out years, we're going to have some exchanges be called out for practicing fractional reserve lending, that they don't have as much Bitcoin as they say they do. They're using the Bitcoin that they've been given to fund their operations. In other words, do you see this happening? Do you have suspicions about certain exchanges out there that don't have? Everyone thinks, oh, they've got all my that they don't actually have the people's Bitcoin they think they have.
Well, it's a black box, so nobody knows, and my opinion doesn't really matter. But there is no doubt in my mind that some of these exchanges will definitely not have the amount of Bitcoin and tokens, and some of them would have been hacked and not said anything about it. Some of them would have used that money for something else and didn't have necessarily good custodial or client money segregation, or some of the things that we do benefit from regulations in a black box system like an exchange. There's no doubt about that some of them are doing that. We've just seen that Mark Capellas is potentially going to be going to prison for 10 years for doing exactly that. I think he was investing client funds during while they were still solvent, and eventually that led to insolvency. So, exchanges are useful for converting and speculating. They're definitely not the place for storage. And if you do store with them and you are lending some of your Bitcoin or dollars in order to receive interest, in order to fulfill someone else being able to short sell, then just have it be known that you only use the amount that you're willing to risk, because the interest earned on that, if it all goes wrong, might be minuscule compared to losing all the cash if it does go wrong. There are exchanges that have better practices, but at the end of the day, they're all black boxes, and it comes down to trusting, and Bitcoin was created to be trustless. So that's the decision that you make. You can take some of your crypto and you can put it in a trusted environment in order to receive returns, but the vast majority of what you are saving should be fully utilizing the trustless environment and the technology that was brought to this planet by Bitcoin.
All right, good reminder there, people. I want to bring up something that we were theorizing about on the last time you were on the show. And again, you were just on the regular weekly show. This is your return to the This Week in Bitcoin show, which is great. But back in November, we were talking about Bcash versus BSV. It seems like it's resolved itself, and it seems like it's really hurt the Bcash ecosystem. It's added up now, they don't add up to what they used to as one. So I wouldn't say it's been a financial success. What's your take on this? What's occurred over there?
So just like when the Bitcoin Cash hard fork happened and the community went into their separate camps, the winner of that whole fiasco was the banks, because the banks were just all having a laugh at this crazy thing called crypto, and how can this ever be sound money with these crypto wars and stuff going on. And the reason I was so opposed to that at the time, and if there was a way of actually resolving this, even though after years and years, because Bitcoin is decentralized, it just couldn't be resolved. So the best was to go separate ways and create a new community around Bitcoin Cash. The winner of the Bitcoin Cash versus Bitcoin Satoshi vision, I guess, was firstly, it was hugely educational. I think crypto industry learned a lot, and podcast. I did Tony Vay's show in the morning, and then I did a Bitcoin Cash community podcast later that day to kind of understand the different perspectives. So my personal take on this is I think there's a lot to learn from all of them, and I think every time you think you understand what's going to happen in crypto, a new event like that happens where everybody's got new things to learn, and there's a lot to take from it. So where are we now? Well, Bitcoin SV, if you tweet Bitcoin Cash, then you are going to be, if you have followers, you're going to be bombarded with people that say that Bitcoin SV is the real Bitcoin. If you tweet about Bitcoin Cash, you're going to be bombarded with that. Now, prior to that, if you tweeted about Bitcoin, you would have been bombarded by people saying Bitcoin Cash is the real Bitcoin. And so now the Bitcoin Cash community have to deal with the Bitcoin SV community claiming that they are the real Bitcoin, just like Bitcoin had to deal with all the Bitcoin Cash people saying that they are the real Bitcoin. So I think it's really interesting to see that the arguments that Bitcoin Cash used against Bitcoin are now being used against themselves, and I think it changes some of the things that have been said in order to try and claim that Bitcoin Cash is Bitcoin. So I think that Bitcoin was the real winner out of the Bitcoin Cash versus Bitcoin Cash SV. And it also highlighted to the world what a very credible, 51% attack looks like, and how to actually protect against that. And I think we learned from both the Bitcoin SV strategy and the Bitcoin Cash strategy. And to get a real life 51% attack highlighted to people that at the end of the day, when you have these coins that were mainly idealized by one or two people, that those characters become the deciding factor in the destiny of those tokens. And they might aim to be more decentralized, but Bitcoin has a very, very unique position in that while there are pockets of centralization, it's far and away the most decentralized network in terms of the different parts of the ecosystem competing with each other. And we now have learned that if you don't agree with the master of the community, then you end up with another master of that community. And then eventually probably Calvin Ayre and Craig Wright are going to fall out over the future of Bitcoin Satoshi Vision. And then I think we're going to have Bitcoin Craig Wright and Bitcoin Calvin Ayre, and Bitcoin Calvin Ayre is going to be telling Bitcoin Craig Wright that this is the real version of Bitcoin. And then eventually Satoshi, Craig Wright that will be probably 5 coins down on his own saying, I am Satoshi Nakamoto, I created Bitcoin, and this is the real Bitcoin, and I am here on my own.
I think that is a very interesting future timeline there. No doubt that when you have these big personalities behind centralized coins, that there are going to be arguments and they're going to split off from each other. It seems to be inevitable, and it's just not a good idea to build a coin around a centralized big personality. And Bitcoin is the opposite of that. That's why Bitcoin is the real Bitcoin, and Bitcoin is.
And that is the reason why Bitcoin BTC is something that no matter whether I disagree with the developers' roadmap, whether I disagree with anything that's going on in the community, it is still a unique freak that I don't think can be replicated again easily. And we're seeing that time and time again. Now, I might like the ethos of the Bitcoin Cash community pushing merchant adoption and trying to get the world to use Bitcoin Cash because they believe that the future of money has to have merchant adoption. And I think that's a worthy goal. But I feel that the strategy of creating another coin based around a grand marketer does not replicate Bitcoin. And we've seen that now quite a few times. And while you might agree with the goal, personally, I believe, and you're free to go off and do what you want and try and achieve that goal. But I think my energy is still, no matter what happens, no matter how much I try and, might disagree with the core developer's roadmap or another developer's roadmap, or if I agree with it, it still is a network that is decentralized at its core, for want of a better word. And while it has areas of centralization, you can't replicate the decentralization that Bitcoin has produced. And I understand all the arguments around saying that centralized development, but we're seeing that it's a lot better than anything else we've got.
I want to. So this whole split was used as a lot of fear, uncertainty, and doubt toward Bitcoin also. And it didn't destroy Bitcoin. Again, Bitcoin is still there. BSV is not the real Bitcoin, even though you're right. Yeah, you see these wacky tweets, these tweet armies out there. That's a whole nother subject matter.
Did you see my Ripple tweet? I've never, ever had so many comments and replies and tweets to my Ripple tweet. Jesus, man. Those guys. They are very passionate about the project.
Well, or is it just automated? I mean,
I kept so I sent out a tweet saying, I understand that Ripple, the company, might want to disrupt Swift, and they might be creating great technology in order to facilitate a faster, cheaper, better banking system. But can somebody please tell me how I use XRP in order to send my fiat money in dollars to another bank in pounds? And this army of people, I think I had 1,000 different comments, were all saying, you know, you're an idiot, you don't know nothing. I did say something fairly derogatory about XRP, the currency, but saying that people are buying XRP, the currency, because they think it's Ripple, the company. And Ripple, the company, is where the value is, not XRP, the currency. You know, I got this mountain of people telling me what an idiot I was. And I actually got, it was on a Sunday, and I was meant to be relaxing, but I spent the whole time actually replying to a lot of these tweets saying, okay, can you, I'm willing to change my mind. I will integrate XRP into Bank to the Future. And I will start making, if you can allow me to send bank transfers cheaper than I can with my current banking system from fiat to fiat using XRP, and not one of them could answer how to actually do it. And so the thing that they were saying that you could do, not one of them could tell me actually how to do it. And I'm still waiting for someone to show me actually how XRP, the currency, can allow me to take a large amount of dollars and transfer them to a large amount of pounds, or even dollars to dollars, and do it cheaper than using the SWIFT network. No one can give me the answer.
Well, of course. I mean, the people that are promoting it blindly, they don't really care what it can do. They just want it to go up in value like Bitcoin did. They want to have the next Bitcoin. That's all. They remember that Bitcoin was worth pennies once. So hey, XRP is worth pennies now. Let's hope that it's going to be worth $3,000, $4,000, $20,000 one day. It's anyway, and with it, I mean, if one XRP was worth $20,000, it would be the all XRP would be worth more than the whole world economy, I think, or something. I mean,
Ripple, the company, owns 60% of them, so they would be the richest, wealthiest. You know, they would be richer than the Federal Reserve, which is currently in $20 trillion of debt. So yeah,
it would be the richest entity in the history of mankind if it went on a Bitcoin run from 50 cents to $20,000. Yeah, it's not. Anyway, that's a wacky subject matter. We get involved in, you know, being personalities in the space. We see things from an interesting perspective because people are always trying to toss things our way. And one thing I have noticed, and I give you all the credit in the world, Simon, there have been a lot of people that have disappeared, cryptocurrency personalities that used to be really big talkers. And I congratulate you on your strong hand. You're just as out there as you ever were. And so are a few other people. There are definitely some people who have disappeared and have bailed out under the pressure, or I don't know what.
Sure. Well, you know, last time we were here, you know, the Mt. Gox fiasco was a lot worse than anything we're experiencing right now. You know, that really was a disaster in our community that actually led to, you know, a better outcome, which is everyone understanding that exchanges are inherently risky for storing your money, your crypto. But during that time, crypto was going down, you know, and I'm definitely not the person to listen to in terms of trying to figure out when the market's going to turn around, or whether you should be bullish now or bearish now. I'm just a long-term bull, and I don't pretend to be able to figure out when it's going to turn around, or when the right time to buy is, or when the right time to sell is, because I've got a track record of being rubbish at those, and I just don't bother even trying to figure it out. Even though, I mean, I do know a lot about markets, but I still don't try and figure it out. But during that time, I was bullish the whole way through. And a lot of people were saying, oh yeah, you know, Bitcoin's gone from 1,250 to 250 now. There was a lot of, you know, depression and exit in the industry. And I think, if I remember correctly, we had developers doing public Bitcoin has failed things like Mike Hearn and people like that. I can't remember the timeline. Things move so fast around here. And at that time, we were just simply accumulating and supporting companies that were supporting the industry. There were companies at the time that people were saying, oh, you know, this is absolute rubbish, like Shapeshift and Kraken and Bitstamp, and all these companies that we were investing in, and investors on our platform were investing in. And they were getting mocked, and people were saying that. And so, and then it took a long time until they actually got to actually realize, some of those, I guess, returns, or actually, become wealthier as a result. And so, and this is the exact time right now. But one thing I do know is that the people that have accumulated the most wealth and been able to contribute the most to the crypto industry were the people that were there during the bear market. And recently I tweeted out acknowledging that real crypto people and real crypto content creators create content during the bear market because they're not getting views on their videos. And they're there and they're doing the hard work that no one else wants to do. The people that are creating content just during the bull markets are the same people that are telling you to buy BitConnect and putting out adverts of why you should. I guess CNBC, a classic example. Telling you to buy Ripple at $3 and. So, the people, the most happens during a bear market, the most building, the time to accumulate, the time to actually, get assets at a reasonable value because you're not competing with the whole world trying to onboard. The time to actually really be involved in this industry is during the bear markets. Wants to be involved, apart from the people that are actually preparing and making shit happen for the bull market. Sorry for the cursing, Adam. Don't want to get your video banned.
No, that's good. They don't hear.
You've been talking about a bit of censorship, right? If you curse on YouTube now, something maybe we shouldn't be talking about it.
Well, we'll get to the actual the Patreon subject matter in a second. I want to talk about though something that you glanced upon. With these, I want to talk about Bitmain actually, and we didn't talk about this off air or anything like that, so this will be a little bit of a surprise. Do you think they'll end up doing an IPO? And with all these companies out there, do you think most of them will go the IPO direction, or will they just be acquired? Some of these big companies.
I think we're going to see a mix. I mean, I just don't know why a company in the crypto space would want to IPO. I would much rather wait for a securities token or some kind of innovation that we can build upon blockchain that's inevitable. I just don't know why you would want to IPO. I mean, yeah, it is a way for the early investors exiting to retail. The IPOs will happen. I don't know. It looks like Bitmain's going to struggle to raise that kind of money because institutional and retail investors are just, that don't understand the industry. They're going to be very hard to convert during this time, especially, having the foresight to see through some of the FUD that's coming out about mining and the challenges that the miners are experiencing right now. When things go this quiet and something was publicly announced and then it goes a bit quiet, I'm a bit skeptical about whether the Hong Kong Stock Exchange would allow Bitmain to actually go public. And I think it will be censored at the exchange level.
Well, let's talk about the mining death spiral. Speaking about mining FUD, what do you think about it? We've heard about mining death spirals again before the 2016 halving, like around 2014 and 2015. So is this just cyclical? We're going to hear about mining death spirals before every halving, and then every halving we're going to see it's not true.
Well, mining death spirals were built into the system. The way that this system was built is that when lots of people want to mine, the difficulty rate goes up, which makes it more challenging to find a Bitcoin. And then the miners actually are the people that are distributing the Bitcoin because they have to buy their electricity in fiat currency and therefore have to sell a great percentage of their Bitcoin on exchanges or OTC to people that want to hold them or people that want to use them. And miners are essentially a way of distributing it because they have to cover their fixed costs in fiat. And it is a problem in that when the price of Bitcoin goes down so much, then only those with the largest war chests and have planned ahead are able to actually do it. And then all those that can mine at the most efficient way are the only people that are able to continue. And it doesn't lead to me concerns in terms of Bitcoin security, but it does lead to more centralization in that only the most efficient players will be able to survive and weather the storm, as the price of Bitcoin cuts more and more people out of the mining market. But then you get a difficulty adjustment, and the difficulty adjustment makes it easier to find Bitcoin, the less hash power that are on it. It makes the network slightly less secure. And what we saw during the Bitcoin Cash and Bitcoin SV network is that hash power matters, and Bitcoin has got more hash power than anything out there. So it makes for interesting headlines. It makes for challenging markets if you're a mining company and then you need to lay off a load of your staff, or the company doesn't make it. It does lead to some kind of centralization effect during those bear markets. But at the same time, you've got other companies that are coming in that are preparing for the bull market and start creating, some of the larger companies might come along and try and compete. And so, but the end result is always the same. The algorithm was designed to have market forces adjust, cut out the weak, and allow people to compete and come in during the bull markets. And it's one of the most extreme efficient markets I know, the mining markets, in terms of the algorithm adjusting to meet the market conditions. And it adjusts to meet those market conditions. And Schumpeterian economics, for those economics out there, talk about creative destruction. And during bear markets, you get a lot of creative destruction from the inefficient and the people that were never meant to be there. And that's what we're seeing right now. Schumpeterian, creative destruction, and economics at work, the free market playing its role with no intervention at the moment.
And I just want to remind everyone, they call it the death spiral, but it's FUD because Bitcoin doesn't die in the end. Okay, that's something that people have to. It's a scary term. It's definitely a scary term. We've lived through it before. It doesn't die. It readjusts. It continues. This is part. It's all built in, and we've lived through it before. But hey, if you haven't lived through it before, now's your time to live through one of these bear markets, so-called bear markets. Again, I consider it a time of opportunity and learn from it. So, in the year 2023, your hand is stronger or something like that. That's what the big lesson is. Hey, I want to give a shout out to the UK Bitcoin Master. He's got a show twice a week on his YouTube channel. Look him up, UK Bitcoin Master. He's in the chat right now with all the other people, the British people. No, there's a lot of Europe.
Is that the guy doing the Bitcoin for beginners? I keep getting these tweets saying,
yes. Yeah, he's a big fan of yours. Yeah, you got to come on his show too, man. Yeah, he's bringing it out there. He's over 50 years old, and he's showing the people that didn't grow up with this type of tech that take it slow, take it easy, think long term. And it's a good example. We need all sorts of people out there spreading the word. So yeah, he's watching the show right now. I'm sure he's getting a kick out of this. And I recommend his channel too, because he preaches some sound principles. When you've lived through life, you can teach your experience to people, and you can apply that experience to Bitcoin, the long-term thinking strategy. Because there's a lot of younger people out there, they just go with these trends, they jump on a BitConnect type of thing, and they think it's legitimate. When you've lived a little bit longer than the rest of the people, you know that if it's too good to be true, if it sounds too good to be true. And we do anyway. It's good to see UK Bitcoin Master there, and hopefully there'll be others like him joining the community that think hard and think long term like him. Now I want to bring up about one last thing about content creators. Patreon is a way for content creators to raise money through their just by signing up for Patreon. But now Patreon is kicking off people they don't agree with politically. I just see this as a really big opportunity for Bitcoin, for people to spread the word about just list the Bitcoin address, people. At the same time, I think there's some companies that want to do fundraising with the type of Patreon fundraising with crypto. Where do you see this going? Should people just keep it simple and list the Bitcoin address, or is it just another point of weakness if we create these third-party crypto fundraising companies because they can be shut down.
Yeah, I mean, you'll have all of the above, really. You'll have people that are using Bitcoin in the way it was intended, stick up a QR code, but unfortunately, that won't get as much traction as if you created a beautiful user experience. And that beauty usable experience will normally come at the cost of centralization. Then you've got the bit in the middle, which is the bit that I'm really excited about, and I haven't seen anything achieve it yet. I know that we've backed some companies that are looking to do that. I know K.im by Kim.com, he's looking to play in this space. And he is used to, he's created services that have served hundreds of millions of users. He is very passionate about the effects of what can happen when somebody or a government agency tries to take you down. And he's got lots of experience around the legalities of copyright and IP laws and all that type of stuff. And also at the same time as the beautiful user experience of user adoption. And I just can't wait to see a service that can actually achieve something that people can use, and it will be, people still think in fiat. They're not going to think in terms of crypto as what's the word I'm looking for? Not a unit of account. They're going to still think in fiat, but if someone can create that beautiful user experience that combines decentralized storage with great user experience and usability, with crypto where everything is transacted in crypto, but is presented in fiat that people can understand, and has the technology that allows people to actually produce this content in a way where it feels like they're using what people are used to. It's an incredibly challenging thing. It seems so simple to achieve, but it's incredibly challenging, and I just really can't wait for that user case.
Here we go. It's interesting. I had not gone to K.im yet. It says coming soon, the ultimate content monetization system. And yes, it's got a pretty front page and everything. I'm sure the user experience will be pretty good looking there. Want to interview? Okay, so yeah, Kim Doc. I hadn't heard about him lately, so this is good. This is K.im, people. Check that out. It's not much there. Obviously, the behind the scenes stuff with that. So thanks for bringing that up. I didn't even know that was out there yet.
Yes, it's taken a lot longer than everyone would have hoped. It's been a long journey, but Kim wants to build something that can serve hundreds of millions of users from the get-go, and that can really support crypto adoption, not from people that already have crypto, but from people that will use crypto because it's so easy to use, and they have a reason to use it. And so he's got a lot of celebrity backing that are ready to use such a service once it's built and once it can go. So yeah, I look forward to seeing what can be produced there.
Very interesting that the media publications haven't been covering this lately. They used to like to talk about him a lot. Maybe now it's just because they think they'd rather focus on negatives during a so-called bear market. But yeah, thanks for bringing K.im, everybody. I'll keep an eye on that. I'll try to update that in future shows because, again, it is, at the end of the day, it's centralized. But if it's going to bring crypto into the hands of people that would never get it, it's great. This is very, very interesting. All right. I said that was going to be the last thing, but I did want to bring up Venezuela forcing their Petro Fed coin onto pensioners, taking away their bolivars and replacing it with Petros. That was in the news yesterday. To me, it's just it's a foreshadow to other governments in the future are one day going to decide to pay their pensioners in Fed coins. Any thoughts on Fed coins or what's going on in Venezuela or the future and how they're not well, if you think they're a positive or a negative, I think people should avoid them like the plague. And it's a reminder to get into Bitcoin now before your country gets you into their own Fed coin.
Yeah, so we've covered this a lot actually over the couple of years since I've known you, Adam. I think it was one of the very first shows when I actually said that at some point, very soon, central bank is going to attack the retail banking system by issuing their own digital currency and requiring those that hold money at a bank to use the digital currency that was created at the central bank. Now, that's a heck of a mouthful, but when you understand the system, you'll understand that your fiat money is not all the same. It was either created by a central bank or a retail bank, and 97% of it was created by a retail bank, and it is a digital currency. The money in your online banking does not have any physical form. It was simply created by a private bank when they issued you a loan, when they issued somebody a loan. And if you have a positive balance, it's because somebody else has a negative balance. And so all digital currency created by the private banking system is backed by debt. And for that digital currency, the way the monetary policy works is they don't do mining, they don't do proof of loans. And so the digital currency is released into the ecosystem every time somebody borrows the money. And if more people borrow, then the more of the digital currency is created. They call it a pound, they call it a dollar, but it's actually a digital representation of the money that the government creates, which is the actual dollar. And the actual dollar exists in your pocket, and very few people have it. It is a physical format, and it's created by a central bank. And so when a central bank creates their own digital currency, a digital version of the dollar, they are actually waging war on the retail banking system. Now, why would they do that? Well, if they believe that they would like to control everything and centralize everything, then they can issue their own digital currency, and they can remove the too big to fail scenario. So if a bank goes bust, they take too much risk, and they take the loans that they lend out, take too much risk, then you can let Lehman Brothers go bust, you can let Bear Stearns go bust, and you can replace all of the consumers' digital dollar with the central bank Federal Reserve digital currency. And essentially you don't get a reduction in the money supply like what happens when a bank goes bust. You simply replace one form of money with another. Now we're seeing this in real life in Venezuela right now, where people have money at a bank that was created as a loan, and they can exchange that for a central bank digital currency. And therefore the central bank is increasing the size of its power and reducing the size of the banking system and the risk of the banking system. The cost of that is that when the central bank issues the digital currency, rather than the retail bank issuing the digital currency, the benefit is that you move towards a more equitable system, as in it's not based upon debt, it's based upon equity. But the equity is backed upon nothing other than a promise of the central bank and your trust in the political system. So if you don't have much trust in the political system between the central bank and the government, then that is what's backing that system. And they can create as much of it or destroy as much of it. And the other problem is that at least with a bank, they take care of compliance and source of funds and KYC and all the stuff we talked about in the beginning. And if they don't like how you're spending your money, then they can keep it, file a suspicious transaction report, or seize it if they think it's a fraudster trying to steal your money, and all the problems that make so much friction in the banking system. But when a central bank creates it, if they think you owe them tax, then they're going to take the tax straight from that currency, and then you're going to have to go to court to prove that you don't owe the tax. And if you travel to a country that they don't like, your passport is going to be chipped. And that chip will trigger off your digital wallet created with that central bank. And if they don't think you should be traveling there, then they're just going to shut off your funds. And so at least with the banking system, it's one step removed from the central bank, which might be one step removed from the government. But now you're decreasing the layers there. And so the end result is that you will have a deeply controlled, a deeply censorable, digital currency that might create a great user experience if you do everything that the government thinks you should be doing. But the moment they think you shouldn't be doing something, they'll just switch you off. And that's going to be a really, really horrible currency. So I believe what people are going to do in the future is the financial system will go through a 2008 event. It's probably right around the corner. I don't know when. The central bank will issue their own digital currencies and allow the private banks to go bust because they're no longer too big to fail. And then fintech companies are going to build on top of the central bank API keys, and but the government is going to be at the center of it through the central banking system, and the banking and the banks won't sit on top of that, creating digital currencies. Bad for banks, bad for people, good for governments, good for central banks. It's inevitable it's going that way. Then they can make cash illegal and control the entire monetary system. And then you've only got one thing, good for Bitcoin, because you can decide to opt out. And you will have a system that allows you to transact person to person, that allows you to spend it as you choose, and has a monetary policy that can't be manipulated by that central bank at the whim of what they think is right for their country, and is politically neutral. And so that is great news for Bitcoin. The more this happens, and that is part of my investment thesis of why I think Bitcoin is a long-term store of value and will become more and more usable, because people will need to own their own money, people will need to spend their own money, and the more governments create their version of the currency, the deeper the user case for Bitcoin. So bring it on. It drives adoption.
Well, and I say, before they bring it on, people, you should probably opt out now. Opting out early is better than opting out late. When you're more, you say you're not going to rely on the government, but people get into situations as time goes by, as they get older, they become a little bit more reliant on the government. And I wouldn't want to get stuck in that system where they can just turn you off all of a sudden. And who knows where it will happen. But China's well on their way to doing that. It appears at times, at least. They're very good with centralized control and centralized information. I'll say that. So they look like they could definitely go in this that proposed scenario direction that you just brought up there.
That's why governments love blockchain.
Excuse me, what did you say? I didn't hear you.
It's why governments love blockchain.
Yeah, that's why they love it. That's why they love blockchain, for the wrong for those nefarious reasons there. But you should love it for the Bitcoin side of things, and you can opt out. Don't make excuses in the future like, oh, I'm stuck. They turned me off. I can't leave the country. You get into Bitcoin now. You won't have to worry about that.
Choose your blockchains wisely.